Well, good morning and welcome, my friends. Yes, this is a early morning edition of the Flipside, coming to you on this Monday, a little after 8:15 a.m. Pacific Standard Time. And yes, I am still splaying around with the Spreaker application. And as I mentioned to you yesterday, one of the things that I find very appealing with Spreaker is it enables me to throw together a podcast at a moment's notice, rather than when one is tied to a network. You are obviously limited by whatever time slot you in and for whatever period of time you have been dedicated. The attraction of Spreaker to me is quite simply this. We are living in a world where things can change in a relatively short space of time in a rather rapid manner. Therefore, having a direct ability to report on important events, I think Spreaker is going to prove to be a wonderful asset as far as the alternative media is concerned. Taking a look at how we are going to begin the week, financially speaking, the Dow is off to a positive start, currently up triple digits at 143 at 16,246. This based in large part on no negative news coming out of Asia or Europe, and a lot of speculation as to what we are going to be hearing from the Federal Reserve and its various spokespeople over the week. We'll get into all of that in a moment or two, but I don't do this too often, but why don't we start off with the good news this morning? And the good news is the fact that both the metals are substantially higher as we enter into the trading day. Silver above 22, up 32 cents at 22.11. I will not deny admitting I was a little disappointed on Friday when I was hoping that silver would at least close out the week above $22 an ounce, but Friday's disappointment is Monday's joy, and I hope that silver will be able to at least for today anyway close above 22. Gold up $14 at $13.38. Next test for gold, no doubt, will be the 140 area. And according to some analysts, there's a high degree of probability that not only are we going to test the 140 area, but blow past it completely, as many have speculated. Not only are we going to retest gold's previous highs, but on an inflation-adjusted basis, gold should be trading at 2,400. But I've told you that for quite some time now. So here's what we get to look forward to this week. As I said earlier, by and large, the majority of attention is going to be paid to comments made by various Fed speakers this week, and we get a whole plethora of federal officials making statements, and if I am correct, we even get the much delayed Janet Yellen meeting with the Senate. But to give you some idea, today we don't get any Fed speak. Tomorrow we get a couple of economic numbers, such as consumer confidence and the FHFA house price index. As far as Europe is concerned, we get numbers, fourth quarter GDP out of Germany. And the Fed speaker that everybody will be paying attention to is Mr. Trudeau, who, off the top of my head, I have no idea who he is or where he comes from. On Wednesday, the Fed speaker is going to be Rosengren. We don't get any major economic reports out on Wednesday outside of new home sales. What's interesting, on Wednesday we get a non-FOMC member giving a speech, and that's Mr. Lockhart. We get a couple of economic reports, U.S. initial jobless claims, durable goods orders, capital goods orders. And as I mentioned, and I'm not sure exactly when it will be, on Thursday morning or afternoon, Janet Yellen gets to answer questions we already know the answers to before the Senate Finance Committee, which has been delayed because of the weather in the Washington area. So pretty much that's what we've got in store as far as economic bombshells are concerned. But let me also add this morning, because I've done my best to find the reasons behind the pop in gold price and silver price. And I have to say that probably the most accurate analysis comes from the folks over at GATA, and what they are reporting comes via the Financial Times of London. Now, some of you may know getting access to the Financial Times of London is a pain in the butt because it happens to be one of those subscription websites, so you only get part of the story, but thanks to the folks over at GATA, who obviously have a subscription to the Financial Times, thinks that the publicity that of late about manipulation not only of LIBOR and international currencies, but gold and silver have been receiving wider and wider mainstream media attention. And this is absolutely correct. The headline in the Financial Times is London Gold Fix may be manipulating half the time, research concludes. This article was written by Madison Marriage. Let me share it with you. Global gold prices may have been manipulated on 50% of the occasions between 2010 and December 2013, according to analysis done by a consultancy firm. The findings come amid a probe by German and UK regulators into alleged manipulation of the gold price, which is set twice a day by the Big Five: Deutsche Bank, HSBC, Barclays Bank, Bank of Nova Scotia, and Societe Generale. The research found that the gold price frequently climbs or falls once a twice daily conference call between the five banks begins. Peaks or troughs almost exactly as the call ends and then experiences a sharp reversal, a pattern that allegedly may be evidence of collusive behavior. No kidding. Who would have thought? The article goes on to state that this is indicative of panel banks pushing the gold price upwards on the basis of a strategy that was likely predetermined before the start of the call in order to benefit their existing positions on pending orders, according to the research. The behavior of the gold price is very suspicious in 50% of the cases. This is not something you would expect to see if you take into account normal market factors, said one of the partners in the research firm. Alistair McLeod, head of research at goldmoney.com, where, in full disclosure, I am a client, when asked to comment about this report, said that when the banks fix the price, the advantage they have is that they know what orders they have in the pocket. There is a possibility that they are gaming the system. Pension funds, hedge funds, commodity trading advisors, futures traders are most likely to have suffered losses as a result of, according to one of the researchers who said that many of these groups were definitely ready and willing to initiate lawsuits. Let me just remind you, lawsuits are flying around Wall Street like at no other time in history. Several pension funds have recently filed suit against Jamie Dimon and J.P. Morgan's involvement with Bernie Madoff. That's going to be an interesting trial if ever there was one. Anyway, Alistair McLeod goes on to say that pension funds, commodity trading advisors, and all those who suffered losses are definitely going to be seeking out some legal revenge. Daniel Brockett, a partner at a law firm, said that he had spoken to several investors concerned about potential losses. It is fair to say that economic work suggests that there are certain days when the five banks are not only tipping their clients off, but also colluding with one another, he said. Matt Johnson, head of distribution at ETF Securities, one of the largest providers of exchange-traded products, said that if gold price collusion is proven, investors in products with an expiry price based around the fixing could have been badly impacted. Gregory Asillo, a partner at another U.S. law firm, added, "There are certainly good reasons for investors to be concerned. They are paying close attention to this, and the investigations go somewhere. It would not surprise me that there were loose lawsuits filed on a global basis." All 5 banks declined to comment on the findings, which come amid growing regulatory scrutiny of gold and precious metal benchmarks. BaFin, the German regulator, who recently launched an investigation into gold price manipulation and has demanded documents from Deutsche Bank last month because of Deutsche Bank's decision to end its role in the gold and silver pricing arrangement. The UK's Financial Conduct Authority is also examining how the price of gold and other precious metals is set as part of a wider probe into benchmark manipulation following finding of wrongdoing with respect to LIBOR and other similar allegations with respect to the foreign exchange market. My friends, this report, as was pointed out earlier, is pretty much information that heretofore has never received as wide a audience in the past decade. If you talk to anybody 5 years ago about manipulation of gold and silver prices, you were looked at as being one of those people with tinfoil wrapped around your head. As a matter of fact, any talk of price suppression, manipulation, was always regarded as conspiracy theory. However, thanks to Gatter and many others, Mr. Maguire, Eric Sprout, Ergen van Greyes, John Sinclair, Ted Butler, I mean, the list is endless, of well-respected, notable financial people who have long confirmed the actions taking place in the gold and silver market. And in large part, a lot of it all centers around how the powers that be view the US dollar and are committed to maintaining the US dollar as the world's reserve currency, no matter what the price is that they have to pay. And right now, to be quite honest with you, if it ultimately means that the U.S. gets involved in some form of conflict either in Asia or Eastern Europe for the sole purposes of maintaining dollar hegemony, they will do it. There are numerous articles that you should find of interest posted up on my website today at robbynull.com. I have a few video interviews. Dave Hodges, for instance, from the Common Sense Show, feels compelled to talk about the growing list of suicide bankers. But there is an article I want to draw your attention to, because it more than likely is going to be the subject of my show this afternoon over on the Micro Effect at 4 p.m. And it deals with something near and dear to my heart, which is radio. You can find the article. Its headline is "An Open Letter to the Alternative Media." And then asks a question that I know will be tough for a lot of folks to swallow, just simply because of their bias. Is entitled, "Is Conservative Talk Our Poison?" Well, my friends, this is a quick and short half-hour update on what you can expect for the rest of the trading day. And hopefully at 4 p.m. I will be able to tell you that not only did silver close above $22, but gold, more importantly, held on to its $14 gain. Right now, I invite you to switch over to the Micro Effect. I believe Jeffrey Bennett is up at this time. Jeffrey always has something interesting to say, followed by Roger Sales, then Jack Blood, and then at 4 p.m. yours truly. So until again, when we meet on Spreaker.com, my friends, have a great day.